Great to have you on the programme again. So what is actually driving this move we're seeing on oil markets? Is it geopolitics, fundamentals, or what traders were already expecting?
Well, it's definitely geopolitics, because for oil prices to suddenly drop, let's say from Friday to Monday by $10, more than $10 a barrel, that tells me it's not really about suddenly the market is flooded but with supplies, because the Strait of Hormuz has not resumed traffic normally. So it's definitely this risk premium of the fear that market observers and traders have placed on potential escalation or resumption of attacks between the US and Iran. And that seemed to have dissipated at the moment. That said, it has not been eliminated completely, because we don't have really a final deal. We don't have peace and everybody living happily ever after. We have a pause and a potential route to a resolution that can establish a more durable, peaceful situation in the Middle East and the opening of the Strait of Hormuz, but we're not there yet.
Now, President Trump says, let the oil flow. Is that really shifting the market or just triggering a knee-jerk reaction? Is it all about that detail you mentioned?
I think it's more about market sentiment, because when you say let the oil flow, it simply implies that we're going to open the Strait of Hormuz, that tankers can sail in and out of the strait, and that will restore global oil trade to the pre-war level, to pre-conflict level. And also there won't be shortages, there even be some relief or a waiver on even Iranian oil, which was heavily sanctioned even before the conflict. So that's what it means, but it does not mean that it's going to happen overnight. It will take a little bit of time to restore that, but most importantly, we need to see greater confidence in the situation in the Middle East. There's not going to be another escalation suddenly. And at the end, the conflict overall is not over. We still have, for example, Israel and Hezbollah trading attacks from time to time, and that could have spillovers on Iran-US relationship. But at the moment, yes, it means market sentiment is much more positive and much more optimistic than only a few days ago.
You're saying there's no quick fix. Things will take time. But if tensions do ease, what tends to shift first? Is it supply? Is it shipping routes or prices?
Look, at the end, what we have today, what we have had in the last few months, is mainly a logistical constraint, because the Strait of Hormuz was blocked. So we did not have a destruction of infrastructure. Yes, we did have some attack on some production facilities or processing facilities and some refineries, but we did not really have, let's say, oil and gas fields being damaged or an entire complex being set on fire. We had logistical constraint in the shape of the Strait of Hormuz, which was blocked. And as a result, if you open the Strait of Hormuz, you are removing that logistical constraint, and traffic should resume. It might take a little bit for all the traffic to be resolved, because you cannot expect all the tankers to go all at once in one go, because at the end the Strait of Hormuz is a narrow water passage, but at least it's much better than having a complete blockage of the strait.
Carole, what's the biggest factor that decides whether oil holds these levels or breaks out of them again in the days ahead?
The major factor would be some increase in the number of tankers passing through the Strait of Hormuz. That's what the market wants to see. As long as we still have very timid, maybe few tankers, less than 10, passing through the strait, and we don't see a notable increase, I'm not saying we have to go back to the hundreds of tankers that were sailing through, then we should expect to see this kind of floor to the oil price of 80, let's say $80 a barrel. It cannot be so precise, but just to give an example. And then the more we see tankers sailing through the Strait of Hormuz and a diffusion of the tension between the US, Iran, and Israel, then we should expect to see further downward pressure on prices, because market fundamentals without the geopolitical risk premium do not really justify the current price level.